Hey everyone, it's Adam. Once again, I'm the editor-in-chief of The Fifth Person, and in this video, we're going to talk about how much life insurance you should buy. So insurance is something that's really important because we need protection in our lives. But if you have too little insurance, you're not adequately covered enough. But if you buy too much insurance, then you're paying too much in premium. So in this video, we're going to answer the question about how much life insurance you should actually buy that actually makes the most sense for you. So if you're ready, let's go right into the video. Well, you might be wondering why we're talking about insurance when most of the time we're talking about how you should invest or what you should look out for. You want to invest in high quality stocks and all that. Well, the reason for that is because you want to make sure that your financial house is in order before you even invest. And part of making sure that your finances are in order is to make sure that you are adequately covered in terms of insurance. If anything happens to you, you or your family are taken care of. So having enough savings, having enough insurance is part of having your personal finance in order before you even start considering investing in the stock market, where there's a lot of there's a risk to consider. All right, so make sure your financial house is in order before you start investing. So we're going to cover about insurance here. Now there are three main kinds of insurance. The first one is life insurance. So this is life insurance where if something happens to you and you pass on, or you suffer from total permanent disability, the insurance company will pay out an amount of money to your dependents, and make sure that they're taken care of. So this is what life insurance is for. The second kind of insurance is health insurance. So this covers like your medical costs, critical illness, hospitalization, personal accidents. So if you fall ill and something happens to you, health insurance will be there to take care of your medical needs and all of that. And the last kind is general insurance. So this is kind of like policies that cover like your car insurance, your mortgage insurance or fire insurance. So these are kind of general insurance policies that take care of other things in your life. All right. So for the purpose of this video, we're just going to cover life insurance and how much life insurance you should have. So the big question, how much life insurance should you buy? So this could be, something that's on your mind, especially if you're considering a policy right now, or this is something that you're not familiar with and you're just confused with the different kinds of policies and how much you should cover yourself and all of that. So I'm going to answer this question for you because, the thing is, if you have too little life insurance, then your loved ones are not adequately covered enough. But if you have too much life insurance, then you end up paying too much in premiums. And when that money could actually be for your savings or for your investments where you could earn a much higher return. So you want to be in that sweet spot in the middle where you just have the right amount of life insurance for yourself and your loved ones. So in this video, I'm going to cover 4 different ways that you can calculate how much insurance you should buy. And I want to highlight that these are just like rules of thumb, all right? So you want to make sure that, remember that these are just guidelines and you want to take them and apply them to your own personal situation and what makes the most sense for you. So the first method is to do something called 10 times your annual income. So for example, if your annual income is $48,000, you multiply that by 10, you have $480,000. So this is the amount that you want to insure yourself for. If anything happens to you and you pass away or you have total permanent disability, this amount of money will be paid out to your family so that they are taken care of for at least, theoretically the next 10 years because they have 10 years of your annual income coming in one sum. So this is a very simple way to get started. This is kind of like a ballpark figure, a guideline for you to start considering how much life insurance you should buy for yourself and your family. Now the second method is to do the same thing, 10 times your annual income, and then add your mortgage balance as well. And I think this is a very important point because you want to make sure that there's always a roof over your family's head, all right? So the same thing, you take your 10 times your annual income, and then you add your mortgage balance to that, whatever it is. It could be $300,000, $200,000, $500,000, whatever it is. Add that into the formula, and then you have the amount you should insure yourself for. So in this example, it will be $780,000. So this ensures that if anything happens to you, your family has at least 10 years of your annual income coming in, and the mortgage balance taken care of, so they will never ever have to lose their home. So I think this is a highly important thing because I think having a home is so important. So this is something I think you should consider as a way to calculate how much life insurance you should have. Now another way you could do this is to take a life insurance policy for your annual income and then use a mortgage insurance policy for your mortgage balance. This might make more sense for some of you. This might be more flexible as well. So if you have if you have mortgage insurance available, you should consider that as well. And if you're living in Singapore and you live in an HDB and you're paying your HDB mortgage through your CPF, you automatically have mortgage insurance for yourself through the home protection scheme. So for everyone else that's watching this video from anywhere around the world, just look out for any mortgage insurance if you want to make sure that this portion is taken care of as well. Now, the next method is called income replacement. So this is very similar to 10 times your annual income, but what we're going to do is you're going to calculate how many years you have left until you retire. So let's just say, for example, you're 35 years old and you plan to work until you're 65. So in this case, you have 30 years of your career left, all right? So the same thing, you're going to take your annual income right now and multiply that by the amount of years you have left until you retire. So in this example, it will be 30 years. And then the amount you want to insure for yourself for will be $1.4 million in this example. So this is very similar to 10 times your annual income, but this is a lot more conservative because you want to make sure that you have your income taken care all the way until you retire. So if anything happens to you, your family has this guarantee. So obviously, if you do this method, you're going to pay more in premiums because you're insuring yourself for a much larger amount. But then again, it's up to you how much you want to, whether this makes sense for you and your family. But this is another way. If you feel that 10 times your annual income is not enough, then you can consider doing this method instead. And the fourth method you can consider is to use premiums as a percentage of income. So instead of looking at the total amount that you want to insure yourself for, this kind of like flips it the other way around, and you want to calculate how much premiums and maximum you should pay for your policies, all right? So the formula is to take 6% of your income plus 1% per dependent that you have. So if you have 2 dependents, that's plus 2%. If your spouse isn't working, that's considered a dependent as well. You want to add that in also. So let's just say you're again making $48,000 in annual income. You multiply that by 6%, and if you have 2 dependents, for example, then you add 2% to that. You multiply that, and you will end up with $3,840. So this is the maximum amount you should be paying in annual premiums. All right. So how much you can be covered for really depends on the type of policies that you consider for yourself. But this is the amount that you want to set aside for your insurance policies. There are really 2 kinds of life insurance that you can consider out there. So there's one which is whole life, and there's one that's term life. So what are the differences between these 2 kinds of life insurance policies? So for whole life, it's kind of like what the name says, right? So you have protection until the end of your life as a lifetime or until 100 years old. And for term life, it only covers you for a fixed term, hence the name term life, right? So 25 years, for example. For whole life insurance, it builds a cash value. So for whatever amount of premium that you're contributing to your whole life policy, that amount is put aside as savings as well. So at the end of your policy, or after a certain amount of time when you can withdraw it, you actually have a cash value that you can take out. So this might make more sense for some people if they prefer this. But for term life policies, there's no cash value as well. There's no savings component. It only provides pure protection. And in terms of premiums, whole life policies are a lot more expensive in terms of premiums because obviously you have a cash value at the end of that. All right. So if you want a whole life policy, take note that you have to pay a much higher premium. For term life, you're just paying for pure protection. The premiums are a lot lower, and because of that, you can also insure yourself for a much higher amount. If anything happens to you, because you're paying, you're just paying for a much lower premium for the amount of coverage that you get for a term life policy. So which one makes more sense to you really depends on your personal situation. For me, I prefer having term life insurance for myself because I just want pure protection. If anything ever happens to me, I know this part is taken care of, and the rest of the money that I have, I can invest it myself and my own returns. But then again, this is really that's for me. That makes sense for me. You want to make sure that you choose something that makes the most sense for you. So just to summarize, these are the 4 different methods you can use to calculate the amount of life insurance you should have. So 10 times your annual income, 10 times your annual income plus the mortgage balance, or you can use mortgage insurance to cover that portion as well. You can use the income replacement method, which is very similar to 10 times your annual income, but then you multiply it by the number of years you have left until you plan to retire. Or you can use premiums as a percentage of income as well to decide the maximum of amount of premiums that you want to pay for any policy that you take. All right, so these are the 4 different ways. I hope they really guide you in the right direction in considering how much insurance you should buy for yourself and your loved ones. All right, I hope you really enjoyed this video and you learned something really, really useful. So once again, if you really like this video, just hit the thumbs up, and share this with your friends and family. If you have any comments or questions, feel free to share them with us as well, and subscribe to our channel because we have more great video content for you coming along the way. My name is Adam once again, and thank you so much for watching us.